going to say sunny, but I think it's getting there. It's still a little bit foggy, which is San Francisco. So good to see both familiar faces and then new ones as well, who I don't know quite yet. As some of you might know, we had this space reserved for a company meeting, which we've shifted out a couple months and then tried to think through what do we want to do instead with the space since it's here. And so I jumped in and told our CEO, Jill, and President Kevin that I'd be happy to coordinate something with some current and former clients where all of us get to talk about trends in financial services, so for that industry specifically. So that's what you're doing here today. And I didn't want it to be a big room full of people and more just something a little bit more intimate so that you can have good discussions and ask a lot of questions. And my goal for this lunch is obviously to provide all of you a forum to share and learn something new. So I have kind of scripted it minutely, minute by minute, and I know Kevin won't follow my script, but that's okay. I'll jump in if he starts rambling, which I don't think will happen. Since you didn't come to hear me speak, I want to introduce you to the panelists and the facilitator, of course. And I also wanted just to point out for all of your purposes that the panelists are not necessarily contributing views or perspectives that are shared with their current place of employment. I know that sounds very legal.
Except me.
Except Jill. But they rather correspond to the views that are based on their own personal and professional experience. I just wanted to make sure, I know when I introduce them, you'll hear where they're currently working, but those are not the views that they're going to be sharing. Also wanted to point out real quick, Eric Greenfetter, who's our chief architect and was eager to be here today and facilitate this. I know he's worked with many of you. He's home very, very sick, so he didn't even get on the plane this morning in Colorado and apologized profusely, and I've then given the banner over to Kevin right here, so poor guy is jumping right in, which I know he'll do perfectly well. So without further ado, quick introductions. Dave Hovez is a longtime, here's Dave right there, longtime banking executive, various positions in banks and associations, currently an SVP of the California region for Bank of Guam, and a director of the Association of Asian American Bankers. Last year, he was chairman of Western Independent Bankers, which informs, educates, and connects community banks. And previously, he also served as chairman for the Western Independent Bankers Service Corporation and as president for MNB Holdings Corporation. So following his MBA at University of San Francisco, where we crossed paths, so I have many stories I could share about Dave, and I won't. Dave became CFO, then president and CEO of Mission National Bank here in San Francisco. I have a bunch of other things on here, but I think I'll just go over that. It's on his LinkedIn profile. Steve, who I've known also a really long time, he's an experienced business executive, technologist, researcher, and author with a 30-year track record of delivering strategic initiatives and solutions. He and I both worked at Accenture together in the 90s, and then we also both joined Primitive Logic in 2000. So we've crossed paths a number of times. Following a successful 20-year consulting career, he joined Wells Fargo, where he's responsible for delivering their international expansion strategic initiative designed to provide consistent wholesale banking services. And it goes on and on. I have a whole bunch more to read on here, but what I think I'll do is I'll send out bios to everybody who's attending so that we can move into the good stuff. Jill Reber, jumping right there in the middle, is our Primitive Logic chairman and CEO. She started with us as executive vice president, general counsel, and CFO in 1990 and maintains the vision to change the way the world thinks about consulting. Technology is nothing without people, which is why we're doing things like this. And we want to humanize technology through mindful consulting. We listen, then consult and deliver. And prior to joining Primitive Logic full-time, Jill was a principal of her law firm, a partner at Lieberman and Reber Law Firm, a litigation associate at Jeffer, Mangels, Butler, and Marmaro, and a litigation associate at Sedgwick, Dettert, Moran, and Arnold. Again, a lot of things I could read on here, but I'll let you look at her LinkedIn. Kevin, without introduction, no, I will say a couple words, so thank you for stepping in. So Kevin, Could keep going. I've known Kevin for 20 years. We were both at Accenture together, and he joined Primitive Logic in 1999. He's president of our company. He received his Bachelor of Science focus on mathematics and computer science from Stanford. And so without further ado, I'm going to turn it to you. And I know you're not going to follow my script, but I will keep giving you notes.
Thanks, Anisha. Everyone can hear me okay? All right. So normally I would be up here as a regular MC, and I'd be telling jokes, and we'd be going all off schedule. But I know Anisha will not be very happy. So I promised her that I will stay on script with my time and follow everything perfectly well. Do my best with that. Yeah, please feel free to eat. I'll make sure I speak loudly enough so it covers anyone's chewing. But feel free to eat. So good morning. Thanks for coming, and thanks for sharing some of your time on a Friday morning with us. We're here to talk a little bit about trends in financial services and what kind of trends our panelists are hearing. We'll bring those discussions to the table as well, and just talk about different trends we're hearing out there. And some of the trends that we're seeing, it's caused by increased competition. We're seeing regulators help increase competition, new rules and regulations coming out, changing business needs, and time to market is critical, right? It's no longer acceptable to have new products come out in 8 to 12 months, right? You're going to fall behind. So you've got to figure out how to be more agile, more flexible, be able to move much more quickly in terms of getting new digital products out there to meet your customer needs. I mentioned regulators, and I know Jill will talk a little bit about some regulations, but in general, the goal of what regulations are trying to do is create more competition. And the EU is way ahead of everybody in this. And one of their regulations, the PSD2, Payment Services Directive, the second version, their goal is to create more competition by forcing banks to open access to accounts and payment initiation for third-party payment providers. So easier way to create more competition, get more involved, and banks are forced to adapt and adjust on how they do that. And in order to do that, right, in order to keep up with regulations and competition, again, the 8 to 12 months to get new products out there just isn't working very well. You've got to find a way to get more products, more services, more quickly out there and adjust more quickly as well. So one of the trends we're seeing in our clients is microservices. And microservices, at least at a high level, is a way of taking these monolithic applications that take so long to change and breaking them up into discrete services where each service has a very specific point of what it's trying to accomplish. It's self-contained, and then you kind of assemble them together as required. And so that way, as you're making changes, you can change a very small piece, small service, rather than trying to change a monolithic system. So it allows you to make changes and keep up with the trends much more quickly. So that is one of the things we're seeing out there. And it also enables you to be better prepared for what's next, right? Everyone understands the different platforms out there today in terms of web, mobile, Internet of Things, wearables, Alexa. Who knows what's coming next? And so part of the advantage of microservices, it'll enable you to support new platforms much more quickly than if you just had one monolithic application. And again, the goal of microservices, you're containing everything into a very small component versus, again, having all this together where you've got business logic, technology all bundled together. So again, just the idea of being more flexible, more adaptable. So that's just one of the trends we're seeing in a number of our clients. And Dave, I thought I'd turn it to you. You've been in banking for a long time. What are the different trends you're seeing out there?
Let me give a little background on myself and the scope of my current operations. As the Senior Vice President, California Regional Manager of Bank of Guam, we're a community bank that has roughly 24 branches spread across the Western Pacific and as far east is California, San Francisco. The San Francisco operation is a $350 million operation, primarily servicing the 9 Bay Area counties, with also a presence in Los Angeles and San Diego. So as a community bank, we don't develop our own software. We purchase it, and the service providers, it's really been consolidated into 3 major players: Fiserv, Jack Henry, and FIS. So if you were talking to a community bank under $10 billion, it's likely that they're going to have one of those for their providers, which really limits the options that you can plug in. The data service providers will often dictate that. They'll make it financially difficult to plug in any kind of outside providers because they probably offer a product or service that is very similar to the one that you're looking at. From a regulatory standpoint, we have the FRB at the holding company. We have the FDIC as our primary. We have the Department of Business Oversight regulating the California operations. So they have an impact on how and what the expectations are for you to operate. In terms of trends, the trend today is in the priority that is being pushed upon us is data security, privacy, cybersecurity. And the conversation over the last couple of years has been not if, but when you're going to be hacked. So not only is there a tremendous amount of resources that are being put ahead of it in the prevention, but there's also a lot of resources and effort being pushed upon what is your response, what's your business continuity plan, who's going to say what to whom, how are you going to disseminate that, what is the communication strategy that you're going to have to reach out to your customer base if and when that event happens. So that's the regulatory, and that's kind of when the FDIC says you need to pay attention to this. You don't have an option. Well, let me put that on the back burner. It's like, no, you got to pay attention to this. So they really stick it to you. But in terms of service offerings that we're looking at that are interesting, as it relates to financial technology, I think there's a lot going on in the artificial intelligence space, the data mining. For instance, where I'd be interested in, I've seen a few products where your historical appraisal, whether it's a business or a piece of real estate, your house or this building, usually was developed based on how much income can it generate, what are the comparables for like properties. What is being added onto that, what I think is really interesting, is all the other data points that are available to help support that. So if you had two Hotel Vitale sitting next to each other, what would be some of the differentiation points? Well, now you can pull in the traffic going along this street, the traffic, how many people are walking over there, what is the upcoming conference schedule, like how many Oracle Worlds will you see in the next 12 to 24 months? Because a lot of the times, those types of conferences are booked years in advance just so you can secure the space. All that has an impact on the valuation of the property that which you wouldn't have. So you can make a more informed decision, and that, from a credit quality standpoint, as long as you got attention and activity, that's going to be helpful for you. The other portion with financial technology that's interesting to me is the marketplace lenders. I think 18 months ago you had Lending Club have some issues in there, but it looks like they've gotten over the hump. There's a lot more common ground than what was perceived. I think a lot of banks were going into that situation thinking that, well, this is a new competitor to us. And off the top, it might be, but their model requires a lot of a good and plentiful amount of liquidity, because they only have so much of a balance sheet that they can lend. So the opportunity there would be, as they may be able to originate it, they don't have the legacy systems. So the cost of getting an installment loan, a personal loan, a residential loan from a Quicken is going to be much more efficient than what a traditional bank can do. So if you can set the credit quality standards in the portfolio that you'd like to see, it gives you an opportunity to acquire assets at a lower cost. So those are interesting, and I think I went over my 2 minutes. So
It's okay. It's okay. Thank you, Dave. No, very interesting. You touched on a lot of topics we're going to hit on in a few minutes as well. Jill or Steve, is there anything you wanted to add to that before we move on to the next topic?
I'm going to hit on a couple of those, so I'm going to be quiet for right now. Let Steve add if you want.
Sure, I'll add. So just a little bit about myself. I'm Steve Bryant. Anisha introduced me a little bit earlier, and I've done a couple of things. One was a large global implementation for Wells Fargo, which involved a lot of think of building banks in various countries. So a lot of different regulatory bodies around the world, a lot of different aspects of the bank would come into play. So I want to talk about one aspect that Dave triggered in my mind on that. And the other is I'm also an author and writer, emphasizing artificial intelligence and augmented reality, and exploring the ethical and business implications on that business and society, and today specifically around financial services. So we'll touch a little bit on that too. One of the things that I think is very interesting is some of the regulatory requirements we're seeing with respect to privacy, and not just privacy of the data and maintaining it, but also the requirements to maintain servers, for example, within a certain jurisdiction. And if you don't have servers in those jurisdictions, then not being able to perform your business in that jurisdiction anymore. So those are some of the things we're seeing, that when Kevin talks about being nimble and being able to deploy quickly, sometimes you have to think about not just building something in your data center, but perhaps having some sort of satellite somewhere else where you have that capability that you can show is in their domicile. The other thing that Dave mentioned that I think we'll touch on later, so I'll defer that for part of our later conversation, is the intersection of artificial intelligence and some of the things we're doing there. And one aspect that I think is going to be very important to understand, especially in a regulated environment like banking and financial services, are going to be the ethical and mostly the ethical today, but the future will be the regulatory implications as well.
So on that note, I was actually going to talk about artificial intelligence. We were talking earlier, I think I gave a speech to an artificial intelligence conference about 30 years ago on AI trends in the world and AI taking over the world. Clearly things have changed. All right, I might be dating myself with that 30 years ago, but clearly things have changed quite a bit with artificial intelligence. It didn't quite come to be where everybody thought it was going to be, 30 years ago.
Wasn't Cyberdyne?
Terminator.
Terminator. Terminator just came out?
No, this was a normal IEEE conference, and artificial intelligence was a big thing with expert systems and some of the tools we were building at the time. But I mean, Steve, as you mentioned, you've done a lot with artificial intelligence and seeing kind of some impacts on trends and financial services, especially. So if you'd like to share a little bit of that, that would be great.
Sure, I think there's a couple of things that are really fascinating in that space. And when I think about artificial intelligence, especially in banking, the question is, why are we using it? And there's really three areas that we're using it in, and I remember it by the acronym DIP. So one is going to be decisions. So if you have a credit system or a risk scoring system, you're seeing artificial intelligence there. Interaction, so that could be customer interaction or employee interaction. You're seeing that with a lot of chatbots coming online today. And then the third one is process, and you're seeing that with tools like robotic process automation, tools like Blue Prism and Automation Anywhere, that are really geared to try and, in some cases, augment an existing process to improve your efficiency and effectiveness. But in some cases, you're really trying to reduce costs. So you're seeing people deploy these tools to try and minimize the amount of staff that they need, either to increase because they're trying to grow, or they're actually trying to decrease staff in a certain area. So those are three areas that you're seeing AI, and it spans from there. If you were to look at some of the technologies from when Kevin and I first met, and we're talking about rule-based engines in AI, to the things that we can do today with machine learning and some of the more recent discoveries, it's pretty exciting. And one thing that I'm particularly interested in is bias. And some of these tools that are out there can have implicit bias just because of the number of features that they're looking at that we as humans may not be able to detect ourselves. So what happens if, for example, we deploy a system, we train it, we think it's more efficient in terms of making lending decisions, and after the fact we find out that there was some inherent bias, that it was leaning towards people who were over a certain age maybe were not as likely to get a loan as below that certain age. Everything else held the same, or perhaps it was more zip code dependent or something else. So we have to be very deliberate about looking for those biases and making sure that we avoid them in our data sets that we use to train these systems. So I don't think anyone's going to intentionally try and do that, but we have to be aware that computers today, as you look at thousands of features that might be used to train a system to perform a certain behavior, it might pull out something and we might not notice it. And so it's very incumbent upon us from a QA, a testing, a validation role to have that awareness and ask more questions than we might have in the past.
Look,
Yeah, please go ahead.
yeah, I mean, you bring up some good points. I mean, from a regulatory perspective, you got to comply with fair lending. So, in terms of risk, I could see if a shop had incorporated artificial intelligence in their decision making, and you have these biases that you're unaware of. Yeah, I mean, not only from an ethical standpoint, but from a regulatory standpoint, and that's an expensive fine.
Jill, go ahead.
Yeah, also, I think that AI in financial institutions brings up other considerations around the customer, and I think Alexa and Apple Pay are really trying to be the customer hub, so does that relegate financial institutions to becoming the utility pipes of the information and the data? So it's one thing to keep in mind, and banks probably want to provide an integrated customer experience to prevent that from happening. Also, AI in financial institutions definitely brings up privacy and security concerns. Can Facebook and Amazon, Alexa, listen in to the data that's being put across their pipes? And is that really consistent with your data protection and privacy scheme that you think you're having? And also competition, if they can hear what's going across those pipes. Maybe somebody's asking Alexa for loan stats or information on how to apply for a loan with their financial institution, but then Alexa picks it up and maybe they start getting targeted advertising for competitive loans. So there are other considerations outside of AI, and it kind of feeds into my, technology needs to be servicing people, not the other way around. And I always ask, just because you can doesn't mean you should. So let's think about the mindful way of using technology, because it makes things easier, but sometimes it's got unintended consequences, and that's what I'm usually looking out for. And the regulatory stuff I'll touch on a little bit more because there is something specific on that.
And Steve, one of the things you mentioned was companies trying to reduce some of the jobs by automation, but it sounds like from the other aspect, it may not be reducing them, it may just be changing them a little bit, so they may not be the more data entry or decision making at that point, but looking at the results of AI and figuring out, are they biased, are they not biased? So it may just be a different level of thinking or job shifting. I'm not sure if you're seeing anything along those lines.
So what's interesting there is if you look at what a lot of the leading AI researchers are saying, they're all over the map. Some are more along the lines of a whole category of jobs across certain groups will be just replaced through automation, robotics, and artificial intelligence. And others are in a camp that is going to be more additive, or it's going to be more incremental. So I think it's going to play out over time, and we'll see which way it goes. But it does raise some very interesting questions, right? If one of your business's core values is caring about your employees, and you have an opportunity to reduce costs by, let's say, deploying a chatbot on the front end to interact with your customers, or an RPA tool to do some back-end processing, do you also have an obligation to help train your employees for what's next, right? And these are questions that we want to be thinking about ahead of time so that we're not caught with our technologists deploying this really cool solution, and we meet this business driver to reduce costs, and then all of a sudden we're faced with a reduction in force decision, and we haven't thought through the implications of that.
Okay, thank you, Steve. Any other thoughts around this, or should we move on? So Jill, you've kind of hit on a few different things, as others have, with privacy, compliance, security. With your background as a litigator, lawyer for a long time, what are your thoughts and trends you're seeing out there around security, privacy, compliance?
EU GDPR. Raise your hand if you understand what I just said. Put your hand down if you work for Primitive Logic. So I still see a couple out there, which is good. But yeah, so touching on the privacy and protection. So European Union General Data Protection Regulation was put into play in 2016, team with a 2-year grace period for companies becoming compliant. I like to use the term ready for it because compliance is going to be a moving target. It is basically a data privacy and protection regulation with global reach and with some serious teeth. So I'll get your attention first. The penalty for non-compliance is 4% of global revenues, or $23 million, whichever's greater. Some of the sources that I've seen have said that the EU regulators put that in there to get the attention of American egos. So it's basically a consolidated framework in the EU. It's an EU regulation, but it's to guide business usage of personal data that enhances the data protection for EU residents. So the resident can be anywhere. I'll touch on that in a minute, but it's also to harmonize and modernize the data protection standards with the internet and digital marketing and social networking in mind. It replaces about a 20-year-old EU directive, 95 directive on privacy that kind of left it to the EU members to come up with their own way of complying, which led to a patchwork. So this is to kind of harmonize it and give you one place to go to. It applies to any business anywhere in the U.S. that collects, processes, or monitors personal data of EU residents. So let's break that down for a second. You know, collecting data, processing, monitoring, online behavior tracking, digital marketing, that all comes into play here. Customers, employees, others, depending on your business, could be your vendors, even if you've got information of, contractors that are working in your shop. I'm going to touch for a second on the protection because I think everybody pretty much has a good InfoSec program in place. But this has a 72-hour breach notification requirement. Equifax took 6 weeks. So that, definitely would have been a fine if we had been, it's March 25th, 2018. So if that had happened March 26th, 2018, 4% of Equifax's worldwide revenues would have been at stake for a fine. It basically, in my mind, shifts the balance of power of data from the business to back to the individual. If you've had the mantra going, data's the new currency, get a new mantra, because the data stays with the data subject and the ownership of it, and they're kind of loaning it, as opposed to the anti-privacy policy statements that everybody checks when you download an app that says, I own you and your firstborn and all your contacts and all your email. That's not going to fly anymore. So focusing on the privacy aspect of it, some of the stuff that you touched on, just some of the requirements that are focused to empower the data subjects, the individuals. Consent, no more checkbox consent, I agree. The consent has to be specific to the use, to every use. So you're probably going to start seeing consent use cases with probably radio buttons that the consumers, data subjects can turn on and off, because they have to be able to withdraw consent at any time. It has to be an affirmative consent. No more, I got your data, so you implied consent for me to use it. And that you can't deny services because they're not giving you the consent. So that's going to have huge implications for digital marketing and all of the behavior, online behavior tracking and that sort of thing. The rights of individuals from this statute, from this regulation, it's kind of a new area. The consent management and the rights of individuals are kind of the key areas from a technology standpoint, because individuals have the right to erasure, meaning the right to be forgotten, you've heard about. You have to delete all of my personal data. Do you even know where your data is to be able to do that? Can the technology systems manifest that compliance requirement? Portability. I'm a customer of Uber. I'm not crazy about what they've been doing lately, so I want to shift over to Lyft. So Uber, you have to port all of my data to Lyft in a technologically usable editable format, and then delete all my data. So, I mean, those are big technology issues. Prevention of tracking and direct marketing. This one on AI, you have the data subjects have the right to object to automated processing. So you have algorithms that are doing credit scores. You have algorithms that are doing, insurance premiums. The individuals can say, no, I want to object to that process. I want to understand what your process is and make human intervention a requirement in the analysis of my data. So that, those are big issues. Another big area is that it expands the definition of personal data. Here we're used to PII, personally identified information, your name, rank, social security number, address, stuff like that. This reaches into device identification, so IP addresses, cookies, there are a lot, biometrics, and who gets onto their phone by their thumbprint, who has facial recognition, access to authentication. So there's a big range for that. Location data. It turns their location data on their phone when they're not trying to get an Uber. I turn it on and off. When I want an Uber, I turn it on. But location data is personal data. It's basically anything that can identify an individual data subject is personal information, personal data that's governed and will trigger compliance by, Don, I see you like your furrowed brow. This is big, right? We can talk later. The other thing is privacy by design and default. With regard to the state of the art, SOTA, they're calling it. You need another acronym in your life. It's SOTA. So that to me means you really kind of need to have an innovation roadmap so that you're making sure that, compliance, I do avoid that word because that's a point in time, but you integrate another system, that is something for you to pay attention to. And so why do you care? The big, huge fines, that's in addition to lawsuits and reputational damage and everything else. And financial institutions are within the scope. There was just last week, I'm not going to read articles, don't worry, but last Friday, EU's new data privacy law creates headaches for U.S. banks. That was in information management, and it was published 2 days before in the American Banker. There are a lot of information out there. Banks have to pay attention to this. Article 29 Working Party, which is a fancy name for a body that kind of gives information on possible interpretations. That name might have changed already, but it will be changing. They write white papers on certain aspects of the regulation. So one of the white papers is on data protection officers. So if you systematically process large-scale, if you process large-scale processing of personal data or regular and systematic monitoring of personal data, then you need to have a DPO, a data protection officer, who reports to the highest level of the institution, usually would be the board of directors. This isn't like an IT issue. It's not a legal issue or a compliance issue. It really has to go across because you're going to have HR issues, you're going to have your marketing company, then and your CIO isn't an appropriate person for that because they're looking at that from a data, like what's best for the company, in our systems and kind of, protecting that. Your lawyers aren't the right person for that either because if you get hit with a fine, that lawyer's conflicted out of representing you or participating in any kind of defense. So something to pay attention to. But anyway, in that white paper, large-scale processing includes processing of customer data in the regular course of business by an insurance company or a bank. Regular and systematic monitoring includes profiling and scoring for purposes of risk assessment, credit scoring, insurance premiums. They list those as specific examples. So you want to ask yourself, I guess the gateway question, do you have EU resident data? It's not EU citizens. And there's some things, I've talked to some CLO company, C-level execs of companies, including financial institutions, like we don't, we're regional, we're here, we don't have an office over there. The office over there is so irrelevant, I don't even want to waste time on it. But do you know, like if you have a US customer who has a banking relationship with you, moves to the EU, that's an EU resident that's within your scope. Also, dual residencies. So, little tidbit, I'm a Mexican resident because I have a condo down there, but I'm a US citizen. None of my banks know whether I'm a Mexican resident, but if that condo were in Spain, I would be an EU resident. So the intake, and especially for high net worth individuals, there are a lot of people that have dual location, multiple homes. And there are a lot of people who have homes in Europe that also live here primarily. They have dual residency, a lot of times even dual citizenship, which takes that up. So, do you know if you have personal data of EU residents? It's a big question, and it's really worth paying attention to, because if you do, you gotta just pay attention to the regulation, and it becomes a technology issue because of the data life cycle. And if you're in private equity or VC in that realm, you want to consider that in terms of any M&A activity, because are you buying an asset or a liability? You always think you're buying an asset, right? But if one of your targets is supposed to be compliant or with the GDPR, but they're not, you buy them, you can have remediation costs that exceed the value that you were hoping to get from the transaction. So our M&A technology services includes an analysis of whether you have to be paying attention to this sort of thing. But kind of high level, in addition to the InfoSec ramifications of this, data identification, classification, mapping, architecture, and making sure you know the whole data life cycle, including proliferation of data inside and outside of your entity. So if you use Salesforce, for example, you're probably putting some customer data in there. So that's a data processor. You both have joint and several liability to any breaches. Key consideration is good data management, and keep GDPR in mind for all digital transformation activities that you have. There are some positives of this, benefits that it will make you have more efficient use of data. It will also reduce your data storage costs, because storing 1 petabyte of data, $5 million a year? A lot of businesses, most enterprises have 10 million. Are you laughing? Am I wrong? Okay.
Yeah.
So, and then there's a lot of dark data, data that hasn't been touched in 3 years, 7 years, or doesn't even have a data owner in it. You're still storing it, but that data can trigger some liability under these statutes. But you want to get rid of that anyway, which will reduce your data storage costs. Also, customer satisfaction and retention is going to play into this, because IDC calls the GDPR the golden standard that others are going to start following. Canada's already got something comparable. Argentina already has something comparable. The US will probably be the last, because the US companies want to own the data. But I can see that I'm probably going on a little bit too long. Anisha's going to get the hook. I can talk a long time about this, but I have some blog posts on our Primitive Logic Insights page that talk about different aspects of this, and I'm happy to talk to any of you. Just give me a call if you need anything.
Thanks, Jill.
Sure.
Well, and you mentioned how it affects kind of customer confidence, and that also goes back to, Steve, your point about bias.
Mm-hmm.
So if AI is potentially creating a bias, which then can affect a lender's score and whether someone gets a loan, in that simple example, now with GDPR, that person can actually request, I don't want it to be processed in an automated way. I want someone to do it manually. So it kind of does tie in with what you were saying, what you're seeing in AI versus what the GDPR is allowing someone to do, and giving kind of ownership of the data back to the individual to try and avoid that. So, Jill, as you're saying, there are some positive things that can come out of that if you're doing this in the right way to really gain that customer confidence. And just one thing I wanted to add, what you said, more than customers, vendors, it's also prospect data. So if you have a website and that website is accessible by residents of the EU and you're tracking cookies or information about those prospects, even though they haven't converted to customers, it still applies to you. So it is pretty widespread. And I read a couple articles early about England and companies in England when they first saw this coming out saying, oh, well, Brexit, we're safe. Right? It doesn't really apply to us. And now they're realizing, well, no, actually it does apply to us because it doesn't really matter where we are. Right? It's any EU resident. So that was their quick out that went away very quickly after that.
And to that point, Britain, my understanding is that Britain is going to do something comparable to the GDPR even after. There's still going to be an 8 to 11-month minimum overlap when GDPR will cover them before they're actually out. But they participated heavily in an organization called ICO, I forget what it stands for, participated heavily in the drafting of this. So they're on board. They are simpatico with the privacy considerations that are raised by this. So I would expect that they will be putting out something comparable as well.
Thank you, Jill.
Sure.
Steve or Dave, anything you wanted to add on?
Oh, I missed out. When does it go into effect?
May 25th, 2018. So Google's probably going to get a big fine on May 26th.
I mean, so it's an extremely high bar. It'll be very difficult. I would imagine that the OCC, as a regulator for national banks, which would be your bigger banks that have a wider footprint, maybe a global footprint, would come back fighting hard on it, just because they're going to be funded to do so. FRB as well. So it'll be interesting how it plays out as a U.S. standard. I don't know if we could do business. We definitely wouldn't be able to erase transactional data once it happened.
So when I talk with people that have that, so some companies say we're just going to not do business in the EU. And that's fine. You can kind of do that, but you still have the undisclosed EU residents that you're not sure you know about. And it's also, in my opinion, it's just an opinion, can be short-sighted because, as IDC said, this is the gold standard, and there are going to be a lot of other countries that are following suit. And customers, which is basically the reason all of us are here, the individual customers are going to get used to this, and they might go to somebody that's saying, we've got the certification, we're aware of your privacy rights, and we're really taking care of it. And compliance, I as mentioned, don't talk about, but readiness, because to be even like halfway compliant, you'd have to almost start your enterprise architecture over again. Nobody really is in a position to do that. So you get a readiness assessment, finding all the data and the data life cycles, and then overlaying it with the gaps, and then you got to prioritize where do you think our biggest risk is, and overlay your own risk exposure, your risk tolerance level, because it's going to take a while. It's going to be a process, and there are some things that I'm sure will be challenged after this gets actually going, in enforcement. But I think that it is kind of a trend in terms of how you want to approach your data. And if you're already in an MDM project, you overlay this on it, a lot of the questions are the same anyway. So you want to handle your data, your master data management stuff in an efficient way, and making sure that you're getting the business value out of your data. But so if you overlay this, it can actually save you some time and money.
So we're going to go to questions in just 1 second. Just wanted to give Steve a chance if you had any last thoughts on this, then we'll open it up for some Q&A.
I just wanted to piggyback on what Jill was saying, and I'm going to tie that to the conversation earlier about ethics. I was at an AI conference earlier this week, and there were a number of discussions on ethics and some of the legal and regulatory just of AI in general. And what was interesting is as the talks about ethics would begin, a lot of people would clear the room, and which was quite interesting. But I heard two women as they were walking past me, and one said to her friend, as they're leaving, just as the speaker is getting ready to talk, she goes, "No one cares about ethics anyway." And that cavalier attitude, whether it's ethics or regulatory or any type of risk or compliance, I mean, we work in a highly regulated environment, and many of us are very risk averse. And so to the extent we can be thinking about this up front, even if some of it we may wait and see what happens, but at least we've given it the forethought to say, okay, how might this affect us? Is there something we want to get ahead of? Is there something we need to be thinking about? That's the type of planning we want to be thinking about earlier and not just wait and be in a reactive mode.
Right. And yeah, privacy by design and default. So when you're doing any kind of technology, digital transformation project or enhancement to your services, you want to be thinking about this stuff so that it's in your design process.
And you're right on the comment on ethics. I think a lot of what we see out there is most companies don't do something until they get sued, until something happens or someone big gets sued. It is more of an afterthought, even if you're risk averse.
Right. That's why it's like just because you can doesn't mean you should.
Right. Right. So a few minutes to open it up for questions. Army, I'll come back with the mic.
I'll project. This is Jill. See, I don't get what you just said.
Oh, I'm sorry.
Say it all over now.
I could.
May of next year,
Yes.
what does Apple, Google, Amazon do? You're saying that
hopefully-
all that data, which they're in the business of collecting
Yes.
and using and applying, every EU citizen,
Resident. They don't even have to be a citizen.
whatever,
Go ahead.
they have to delete it, essentially.
Well, if they get a request, they have to have the capability of deleting it. So, and I think the right to be forgotten has already been kind of litigated over there. Google threw a lot of money at it, and there was a case, I think it's called the Shrek case or something, where it kind of went down and Google lost. They had to be able to get rid of somebody's data.
So it is a by request, one by one by one. So a person
A data
signs those little boxes or hits the buttons, they're out. The data gets deleted out.
In a perfect world, but can your company do that? I mean,
But
yeah.
it's by, you have to request it. So if
Yes.
nobody does anything, nobody requests anything.
Blanket across the board. That's
Right.
Right.
I think you'll probably start seeing first, because obviously companies like that are already working on different aspects of it.
Right. I mean,
So-
there's consequences. So someone says, I want to be forgotten.
Yep.
You won't get a lot of the benefits that these companies are
Exactly.
offering. So
Exactly.
there's a trade-off.
There's a trade-off.
But see, this is by request. That's
Right.
Yeah.
And I think Americans are used to giving up, just, I don't care about idea. There's so much data out there that nobody's going to be tracking me. Europeans are different, and other countries are different like that. And I see a world where Americans start getting a little bit more conscious of that, a little more mindful of what they're putting out there. The Equifax breach, I'm sure, raised the consciousness bar for some people. You take the Google's use of data to an extreme and combine it with GoPro and Facebook and everything else, and the health information, it can really get to a point where there is no privacy. And this is personal, it's not primitive logic. I feel that's dangerous.
So is your sense that these companies are on it?
Absolutely.
They are.
Yes.
Just a real quick addition to the comment. I worked for an unnamed $10 billion CRM company for 7 years. They might be close by, they may not. And I can tell you that this is arguably one of the most one of the highest focus areas for the company, not only from an IT perspective, also across the entire business. I've never seen another regulatory or compliance-related initiative take such a broad and deep stronghold on the business, its roadmaps, and how it's going to handle the next little less than a year now. And one of the, I guess I'll just leave you with one little piece, the depth at which this applies in technology companies like the company I used to work for goes beyond what you might expect. So it's not just the information that's stored in relational databases or in object databases that some of us are pretty familiar with. It goes down to technologies where you might have non-identifiable indexes. So Elasticsearch might apply in this type of scenario. If you have backups that are still done by tape, it applies to the backups on tape as well. And so you can imagine that a lot of the organizations that are represented in this room are actually larger, much larger, from an IT perspective than the company I worked for. The implications are profound. And I think I would expect that every one of us has some view or some piece of responsibility in there. But I can assure you that the companies you mentioned earlier were consumer companies. On the enterprise side, companies like that who service organizations like yours are taking it extremely seriously, more serious, I think, than I've ever seen.
Thank you, Scott.
Hi. The question that I had was really around the undercurrent that has just existed from the beginning of the panel around risk, compliance, and the need for regulation. And it's really, how do we focus on innovation and being competitive with that undercurrent and really embracing it in such a way that we're able to still have that competitive advantage in doing so? So love your thoughts on that.
So in my opinion, the innovation, if you're focusing on the privacy aspects of it as part of that innovation, then you're going to be more competitive. And it might take a little while for the tide to shift in the U.S. I think it's already been shifting in Europe, definitely for 20 years. But all globally, and if you've got, even in the Americas, Argentina and Canada. So I think that consumers are going to start paying more attention to it, and so that will become a competitive advantage at some point. It might take a little while. I don't know if you have thoughts on it.
I'm seeing it from a couple of different dimensions. There's what are businesses doing to try and innovate and be out in front of applying the leading edge technology. Some of it's going to be based on what did venture capitalists fund 2 years ago, and now are some of those companies at a point where they can deliver their products and services? Are companies who've made investments in some of these innovative technologies, are they ready to deploy them and bring them forward to their customers, their employees, or to their business processes? The other interesting thing, and there's a couple of interesting papers out there. One is a 100-year AI, I think it's a goal, it's an ambitious goal. I think it's called the 100-year AI study or something like that. If you search for that in Stanford University, you'll find it. It's only about 50 pages or so, but they really try and outline where are we going, where do we envision this going, and how do we marry and manage that natural tension between innovation and going fast and regulation, which is trying to also encourage innovation but also prevent harm, right? So it's trying to do that. The second article, which is also an interesting read, also about 50 pages, I forget the exact title, but if you search for President Obama Artificial Intelligence, I think it came out last October. And that one has a much more regulatory, it's by Presidential Counsel, so it has a much more regulatory tone on it. And it's the same type of thing, and they talk about having that light touch and encouraging innovation and really looking from a regulation standpoint, trying to push that out to existing organizations and allowing, because they're closer to the ground, and allowing them to be the ones who face off with companies and consumers. So the good news is people are thinking about it, and they're doing so in a thoughtful way that doesn't ideally stifle innovation. Now, where the risk happens is when a company gets out too far ahead and we have something happens that someone has to respond to, right? And then if a regulator has to respond and they do so because they're in reactionary mode, they may do so in a way that stifles innovation, at least for the short term.
And also, just quickly, like IoT, innovation, cutting edge, went really fast, didn't think about the unintended consequences. How much of a security risk does that present? We're not even thinking about the privacy aspects yet. So thinking about this stuff can save a lot of pain, financial pain. And just, I think just taking a mindful approach to how people use technology is the answer.
Dave,
Yeah,
anything?
I think it's challenging to balance innovation and the regulation, especially from a community bank standpoint. One, you're unlikely to be controlling your software, so you probably don't have a development staff, which means you're relying on an outside third party to develop for you. It's very difficult to bring a vendor in-house. The regulatory expectations is that they're going to act as an agent for you, so you have to go in and do your due diligence on them in a very intrusive manner. So they have to they have a fiduciary responsibility to protect your data as you would as if you were in-house on it. In addition to that, you go through an annual financial review to determine the viability of that company moving forward. So a lot of the more innovative stuff are coming from startups who may not be making money at that point. So you'd be preventative from bringing that piece of technology in-house if you don't believe that they're going to be around next year or 5 years down the line. And as a result, we don't compete based on our products. Right? We compete based on the relationships that we develop over years and our closeness to it, the face-to-face. So, as a result, we compete on the fringes, I think, and make our money on things that aren't exactly vanilla and easy to do. So from a competitive aspect, we're not going to say we have the nicest bells and whistles.
Thank you. I think we're going to wrap up the panel part. I know Rachel will talk about, everyone's going to come to a table and there'll be more discussion there, but I just wanted to thank you, Steve, Jill, and Dave for being on the panel and spending the time.
Oh boy.
And as a token of our appreciation, we've got little Swiss Army knives for you,
Hooray.
so that you continue to bring forward little nuggets of thought and tools to share with the rest of us. And thank you so much for spending time with us today. The fun thing is that so hopefully it sparked some little nuggets or little breadcrumbs that you can now take and discuss further. All of them will be joining different tables, so I think they all know where they're going to be going. And the lunch platters are going to be coming out. We decided to do a family style so that you can choose
Nice.
however much you want from each platter onto your plate, and you're not stuck with a plate of pre-established items. And obviously, I think there should be wines, waters, everything on the table, and there are table hosts, and I'm going to have you raise your hand. Dimitri, your table host over here. Steve, who's in the back of the room somewhere, is table host back here. Ethan, you want to raise your hand real quick? Michael Lee is table host here, and Brian Kelly here. So each of them will start the conversation, but feel free to take it in any direction that you want, and then I'll jump in here if it looks like things start slowing down so that you can share back. And if it looks like you're heavy in discussion, I'm not going to have you share back. And there are little surveys on the tables for the tail end. So I'll see you here again, I guess in about an hour, okay?
Thank you, Jill.